Hello guys, welcome back to another trading video. In this one we're going to be doing some stock analysis on ZIVO. Was going to do it on a pop, but looks like it's a mistaken gapper because it has barely any volume, so there's no point doing analysis on that. And yeah, reason I'm in shirt and tie, I just had interviews today, so never mind that. So to get straight into it, where are gaps? Because obviously we always got to be looking at the gaps because those provide opportunities. And the main gap we have is at 951. To around 804 is where we can see a gap fill happening, so we'll be looking out for that. But in the meantime, what other gaps are there? We have this gap here now created between 279 and 342, and then another gap created at 342 all the way down up to 515. So we have a lot of gaps to be filled. So these are all key targets to be looking out for because these provide trading opportunities, because usually when it comes and closes within a gap, it will most likely fill the whole gap. So key to be looking out for. Then we can quickly see how these will be affected intraday once we plot our standard deviation channels. So as we can see here, where it's trading within, it popped up, and on the daily channel, which is on the right, it came straight up to the first deviation before failing down, and going on to the 4-hour deviation. It broke the first deviation and closed above it, but wasn't able to push to that second deviation. So what we'll do is plot all the closest kind of deviations and ones that it could hit if it continues to go up. Obviously there are more if you want to take notes at 1450, 1580 and 1812, but don't see it going up to those levels, at least in the near future. Doesn't look like a stock that would do that, and looks quite weak. My key target for this, if it continues up, will be kind of this $9.50 to $11. Reason for that, gap fill at 9.56, so could see it going to there, and then if it breaks through that, which isn't really uncommon, it's a bit of a mess on small caps. You don't know if it's going to do it or not. You kind of just have to wait intraday. But if it does, then we would have that target of around $11, which would be that closest next key deviation where we would most likely see some heavy resistance and selling pressure. So that's what we'll be looking at. But if we go onto the daily chart, or the 1 minute chart, sorry, and we can see how it happened. It came into this 732, and this 732 was not actually a key level. That was just where we were placing the kind of gap fill areas. So what you'll be able to see is oh no, sorry, that is the first deviation. So yeah, pre-market came up, hit this deviation and failed. So what that does show us, at least intraday, is if you were watching this live and you had deviations on, you saw it failed this first push, comes to retest it, fails again. When you see that, it's most likely going to fail for the rest of the day, as we saw in this case today, and that's what you usually see. Then it will come back, then test the next closest deviation to the downside, which was here at 515. We'll test that and it will bounce 99, or probably around 90% of the time it will get a bounce, and then it will come and retest. And then we can see if it closes below, we'll be looking for the target to the next deviation lower. Otherwise, if we get a bounce, we would be looking for it to close above that first deviation. That would signal a continuing uptrend. Otherwise, we would be looking more for the downside. But as it's already failed to break through that first deviation, we would kind of just see this as a weak stock and would most likely continue down for the foreseeable future. So for me, this stock does look weak. Wouldn't really be trading it at all long bias unless you're trying to get the small bounce plays. For example, off this 480 may provide a small bounce play, but that's the only time I'd be getting long, maybe to that $5 mark, but that's about it. I would be much more short bias on this stock. Doesn't look like it's going to be doing anything really, and as you'll be able to see from previous bullish pops this stock has had, it failed instantly. Here we had one, failed. Here we had one, failed. Here we had one, failed. And now we're kind of getting another one, and it will most likely fail. Patterns would tend to repeat themselves, especially in trading, so be looking out for that. When you see stocks like that, it's usually going to fail. So this one, I would say we're going to see this fail. But obviously the target's always there, because it's better not to pick a side of the trade, especially if you're day trading, and instead just trade where it's going. So these can be targets that you want to trade off if you want to trade off them. Then where are maybe some good buy zones on this stock? Not a stock I'd personally be owning, but if you are looking to buy it, the gap fill at 280, that would most likely provide a bounce off there. So that would provide most likely a trading opportunity at that. Otherwise, the only other trading opportunity I can really see on this, or buying opportunity, would be 370 statistical mean. May get a small pop off that, but again, wouldn't be looking at that for a key trade. The only big one we can really see would be around $1.12, because that's statistical mean on the 4 hour. However, obviously that would require the stock to go to its all-time low, so that's one thing to be keeping an eye out, because it may not be that likely to go that low, and even if it does, best not to be trading, because then it's very near to being delisted, so it provides another risk obviously being there. So that's it for the breakdown on ZIVO. Hope you enjoyed it. Hope to see you in the next one, and that's it. Peace.